Don't fight the trend, my friends. That's what Bitcoin is telling us right now. In today's video, we're going to be looking for clues across the higher timeframes to find out what is most likely to occur next for Bitcoin. Welcome to Bitcoin Escape Plan. If you'd like to support my ongoing analysis, you can like this video or send it to somebody else who trades crypto. Let's get into the video, guys. So, first and foremost, the 4-hour analysis is brought to you by my membership group, the 4-Hour Break Room. You can check that out in the link in the description down below. I did have an update a little bit earlier this morning. There's nothing I can really say right now, guys. I wish there was some more positive news that I could have for you, but I looked it up for all of the news sources that are coming out that have caused this, and to me, it makes no sense at all. It doesn't make sense to me. To me, the market is not behaving rationally. I will go into that a little bit later on. But broadly speaking, for anyone who did not watch yesterday's video or the last couple of videos, I've been talking about potentially closing my short now for like a week and a half, guys. I did end up closing it, I think early yesterday morning or late Tuesday night. I started scaling out late Tuesday night, I believe. I closed it Wednesday morning, and then I am up significantly on this long trade. I got in, I think, just below $66,000. $65,700 is my average cost basis. Very small position. I wish it was larger. I would be up a lot of money right now if I actually went in with size, but even with only buying a few contracts, it's still one of my better trades of the year, to be honest. So you can't fight the trend, guys. If the trend is behaving irrationally, you kind of just got to accept it. Now, that being said, would I enter here? I don't think so. Like, I have not added to this long trade, and quite frankly, how I was talking about it in the membership before was when we were at like the 68, 69 level, I was considering adding more. And I think I did add more at that point. I was expecting more of a pullback. We did not get that. We continued higher. So now, because we are so close to the targets, let's go get our daily close real quick. Our daily close yesterday was 69.3, which again puts us really close to those targets that we've been talking about. We were talking about them for June and July, about 70K to 73.8K. But now we kind of have to acknowledge that 73.8K to 76.3K may be on the table in very short order, as opposed to taking a significant amount of time to get there. And really, for me, that opens up either one of two scenarios. Either the price is just going to continue to trend higher, in which case there's no reason to close these longs and may even be a sufficient argument to add more size to them. If you want to get more information about how I think about trading leverage, you can watch the video at the very end of this video, the Advanced Bitcoin Trading Course. However, guys, I would not be looking for kissing candles right now on the 4-hour time frame to short. That's me personally. That's not financial advice. I am not shorting this range yet until, again, if we get a clean reaction off 76.3K or 73.8K, maybe, but I don't think so. I think that would be foolish at the moment. So not currently what I'm looking at. One thing that I am looking at is this middle band of the downtrend anchored VWAP. If you have no clue what I just said, go over here to courses. I explain that tool in more detail there. So it's not impossible that we can get a break of it, but what the trend has been so far, specifically in the daily time frame, the last time we broke it was October of last year, and every other time where we have headed towards it, we have rejected it. So far, that has been the trend. So that level is currently sitting at about 79.4K. And for me, guys, it's hard for me to believe that we are going to rise that high. Now, it's not impossible, but it is hard for me to believe that that is where the price is actually heading. And again, I think it's more likely that we start to see a little bit of resistance at this guy right here, our beloved 73.8K level, primarily because that's our largest cohort of buyers. We have three groups of individuals who have bought at the prices that we are at right now. We have the top buyers in 2021 who are either gone or they have had to build conviction through now multiple cycles. Probably the smallest amount in terms of volume, but an important cohort. Unfortunately, a lot of them probably just lost all their money to the cold card hacks, but let's not talk about that. This, I think, is the largest cohort of individuals. This is the early ETF buyers. That's what caused the price to set a new all-time high in 2024, earlier than we would typically expect. We would typically expect it towards the end of a halving year. That was at the beginning of the halving year. That was the first time that had happened in Bitcoin history. I think that is a big reason why we did not get a push to 130 to 150 plus. Just because we got two important psychological breaks in 2024. We got both a new all-time high and 100K in the same year. Therefore, 2025 had nothing left to do, nothing left to contribute really. So that is, again, our second cohort, but probably the largest one is these are people who are buying primarily in their retirements. They are primarily buying through IBIT. They do not have a vested stake in Bitcoin itself. They are not actively using it. Therefore, it's just as easy for them to sell it as it is for them to buy it. They don't necessarily have to stick around. They will trim over time. So they will buy a lot and then trim when it seems necessary and then continue to buy more at a later date. So this most recent cohort, this is the new buyers. And this is where I really, for me, call me crazy, but I don't know why these people would randomly be not subjected to the pain of a bear market. It doesn't really make sense to me that people who are entering late in this cycle are randomly going to get rewarded by the price never going lower. I'm seeing a lot of people talk about how the bottom is in. That to me is just not how Bitcoin works typically. Unless you buy the absolute bottom, you will experience pain, period. That's how it has worked. I don't really have any reason to believe that will change. Again, I'm gonna try and talk about news stories more on Instagram. It's like 90 something degrees out, so sometimes it's hard when I'm sitting out there in my car to actually make extra analysis. But a couple of the stories that came out this week that I think are really important, I'll try and go through them quickly. The U.S. Treasury has made the decision to increase the amount of money that they're willing to buy back, I believe primarily from the 30 and the 10-year yields. So that could potentially have, the rate of those are going down, which could be good for risk on assets. I don't think that it is, again, the cap went from 2 billion to 4 billion. Now that's every time that they buy it, so that could effectively be quite a lot of money over the course of a year, but it's not hundreds of trillions of dollars, you know what I mean? Everything that I found about what Paul Atkins said with the SEC about the regulations about how much money is able to flow into crypto companies, it's either $5 million over the course of 4 or 5 years for a startup, or $75 million a year total for the larger companies. Even if 100 companies get that, guys, which I don't think that there are 100 companies yet that would be eligible for that. You're talking about like $7.5 billion, you know? Like just not a ton of money, like not enough to sustain these levels that we're at. And then the one for me that this blew my mind when I said this earlier, I think I may have mentioned this in today's email as well, and this is why I think that this is temporary. Call me crazy, I could be wrong, but this is why I think this is temporary. For every $1 of spot inflows right now, there are $94 of leveraged positions. There is like $49.8 billion worth of open futures interest, and the net spot ETF flows yesterday were like $500 million. 500 million versus, again, almost 50 billion. So to me, that is overwhelmingly that most of the money in the market right now is leveraged. So the same thing where what we saw was about $1 billion in an hour liquidated from Bitcoin, and I believe about $3 billion liquidated total in shorts over the course, I think it was mostly just yesterday, but possibly between the last 2 days. To me, I don't really see any reason where, again, the majority of that money is leveraged, probably now to the upside. I don't see any reason why that would just flip, again, as we rise to these key targets, where we're broadly seeing the same thing. So I've repeated this a million times, but how I was able to call out that we were going to reject 83K, I called that out in February, it happened in May. There's a number of reasons for that. One, I was looking at this older Fibonacci pivot. You always have to pay attention to the Fibonacci pivots on the weekly and the monthly time frame. They just tell you a lot. That's Pivot's Standard Auto, I think. Pivot Standard, something like that. Again, you can go to the courses tab. I explain my indicators in more detail there. That one's super useful to us. That's how I have that 76.3K to 64K range that I talk about all the time, guys. You guys are very familiar with that at this point. People quote me back these levels all the time, because that's how much time we spend at those. So broadly speaking, we're already seeing a major divergence, because typically how many green candles do we see in a bear market year, guys? About 3 to 4. We are now in the process of printing our fourth. And I think pretty much everything that we said previously about this month, it already did fulfill that gap fill. So we already did, there was a discrepancy between the July close and the August open, where July closed at 62.8K, but for some reason, August opened at 64.2K. It has since filled that gap, obviously. That's where I should have closed my short. Instead, I left it a little bit open too long. Still pretty happy with that, guys. To be honest, it could be a lot worse. Like I lost less than 1% on the position. Not even my total portfolio, like less than 1% on the position. So that could have been a lot worse. And then I did jump into this long without a full plan. I did not jump in with full size. I would normally enter with a lot more size than I did, but it's already, again, become one of my better trades this year. And I did not react emotionally. I just listened to, okay, the chart is not behaving logically. I now have to accept this. The other reason why I personally don't think it's going to last is the actual large amount of money that flows in is the stablecoins narrative. The stablecoins narrative does not fully take place until, as far as I'm aware, January 18th of 2027. That's the earliest, according to the Genius Act, that banks are actually like mandated to have to start this stablecoin onboarding. They don't have to do it prior to that. So to me, the really large pump that is here to stay for Bitcoin does not occur until JP Morgan Chase and Citi are sending you little pamphlets in the mail to incentivize you to spend these stablecoins. They can't have yield. They're not allowed to have yield. So why would you, a person, take $100,000 that you can have sit in treasuries and earn yield on, and instead buy $100,000 worth of stablecoins that you can't do anything with? The answer is you wouldn't. So they need to incentivize you to spend them. They need to incentivize you to spend them because they have to back them one-to-one with the US dollar. And the US government does not have the same buyer demand. It's having to float the Japanese yen right now. China is reducing demand, Russia's reducing demand, Brazil's reducing demand. Everyone is reducing dollar demand. They need a new customer. That customer is everyone who is going to use stablecoins via the banks. So to me, that is still when we're talking about hundreds of billions or trillions of dollars flowing into the market. Everything else that I have seen in the news is a number that is in the tens of millions or hundreds of millions. This is a $2 trillion asset class. I mean, obviously it's down right now, but this is a $1 trillion asset class is the point. So unless we're talking about hundreds of billions of dollars flowing, then I personally do not think that this is going to stick around. So let's talk about those key levels and again assess those two scenarios that we have of either it's going to continue or where are we going to find resistance. So I am going to jump over the weekly time frame, but before we do that, let's take a look at a couple of the key broader concepts that we need to keep in mind. So broadly speaking, in a bear market year, we will eventually see an interaction with this upper band of the Elder VWAP. The Elder VWAP is literally just an anchor VWAP drawn from 2011, and I just think it sounds cooler to call it the Elder VWAP. So typically what we will see over the course of a bull market year is the chart will expand into a bell shape and consolidate during the bear market until such a time as the price is pulled down toward it. Now, obviously, it does not look like we are still getting pulled toward it, and that level itself is continuing to expand. Not aggressively, but is continuing to expand as it is consolidating as well. So we have not seen that, obviously. Now, it is my expectation that over time, we will not have an interaction with it. If we go back to the older history of the chart, we used to trend towards the middle band, and each cycle we've gotten further and further away from the middle band. So what that tells me is that there will come a time where we are fully disconnected from the upper band, where it won't be useful anymore. We'll be too far away from it for it to really be useful. I don't know that I personally believe that has occurred. Again, for every $1 of spot, every $1 of people saying, yeah, I'm going to stick around for a bit, there are $94 of people who are leveraged, just trying to like catch a little bit of interest off of whatever the price is doing right now. That to me is not sustainable, guys. That is not indicative of a market that is just going to stay elevated indefinitely now. again, for me, until that stablecoin inflows comes in. When those stablecoin inflows come in, we're talking about the tune of trillions of dollars, hundreds of billions of dollars a month. Then absolutely, I believe it. Then the price is going to continue higher. I will be in a heavily leveraged long at that point, and we'll be doing nothing other than making YouTube videos and talking to the membership. Like that's it. It's going to be a very easy once we're actually on that side of the trade. I am not yet confident that that is where we are. So the other thing that I want to talk about on the monthly time frame before we move over to the weekly time frame is this guy right here. This is the monthly SMA. Now we broke the monthly SMA earlier than we typically would. In past cycles, we broke it closer to the start. So it's January of 2022. And it was very late in 2018, September, October of 2018. A pretty sharp recovery in 2018. Subscribers are already well aware that this I would have expected deep into next year, but this could be what we see now if we see a sharp recovery to the upside. It's not my base case. I do still think that is more likely to happen on the other end of the stable coins. I think it's more I think it's more likely that gold is going to continue to rise than the stocks are inevitably going to continue to rise. I watched a really interesting video from Andre Jick yesterday where he talked about how similar to the 2008 financial crisis, the 2008 financial crisis eventually eroded because of the quality of the bonds that people were continuing to buy as they were taking on new mortgages and everything like that. And as far as I understand it from his video, the AI companies that, I'm sure that you have seen this, where AI companies are getting funding from other people who are just taking out loans to fund them. Like it's not actual money that is flowing to them, it's IOUs. That IOUs are actually going to be funneled into pension companies that are buying bonds that are 25, 30-year bonds, where you have no idea if those AI companies are going to be worth anything in 30 years. You don't know if they're going to be relevant at all. Point is, these pension companies, these retirement advisors or whatever, are the ones who are having to buy that, and they're the ones that are going to eat it. When the price collapses, they're the ones that are going to eat it. It's not going to be these companies. It's not going to be Microsoft. It's not going to be OpenAI and everybody else. It's going to be the pension funds that bought their 30-year yields, or bonds rather. So for me personally, at some point, the stock market's going to break. I think that it's this year. I don't know if it's this year. I think that it's this year. Bitcoin will drop on that news. So even if it really seems like it's not going to drop, and there is a very high likelihood that we now will continue to rise into that September 9th to September 15th window. September 9th being when they officially start the buyback. They increase the cap on buybacks for treasuries, which they have to do. Otherwise, the yield will start to rise again for the bonds if they're not able to buy them back. And again, we have lost the demand of countries like China, Japan, etc. in order to buy that debt. So we need a buyer of that debt. That buyer of the debt can only be the Fed for so long before something breaks, and then we need the people on the other end of the stable coins to actually fulfill that demand, or the US government collapses, which obviously they do not want to happen. So more on that in my book, guys. If you want more about how I think about just like the broader narratives of Bitcoin, that's where you can read it. BitcoinEscapePlan.com. Put in your email. You can read that book for free. I just go into a lot of these broader ideas that I try and repeat them every once in a while here on the channel, but that is why I wrote a book about them, just because it's easier to say it in that format, because it doesn't really change. There are some things about this that just do not really change. So one thing that I do not really expect to change for us is, typically speaking, when we are disconnected from the monthly SMA, it's a period of about 7 to 13 months. We are on month number 9 now, being fully disconnected from it, which means we are starting to get to the point where it is more likely, as opposed to less likely, that we are going to have a retest with it. And that could look like the next 3 months steadily rising towards it before having an interaction. However, typically that interaction does continue. So if we do not see a rejection, as I said, at the middle band of the downtrend anchor VWAP, and that can happen across timeframes. I think it was a little bit higher on the daily time frame. It's about 78.3K here on the monthly time frame. I don't have a reason personally why the price is about to break above there. I would think that the monthly SMA is going to continue to trend downward over time, probably back down towards 83 before we have an honest interaction with it. And I did talk about that. I did talk about that when we were hitting 83 in May. I talked about how we are likely going to experience that with a different flip side going into next year, primarily because of this guy right here. So I shall go over the weekly time frame to show you this, but essentially how I was able to call out that top at the time was, one, we've got the middle band of the downtrend anchor VWAP. I knew we were going to get rejected off of it. Two, this is the anchor volume profile. The anchor volume profile tells us how human beings have reacted to certain price levels, how many times they press buy or sell at certain price levels. You can see at 83K, it's pretty light. Not that many people really cared. They didn't step in at that time, you know? So for me specifically, what I'm paying attention to is about 72K to about 86K. The price has not stayed there long enough for people to have a strong emotional bias towards it. This is very important. This means that the price can get bullied in either direction fairly easily. And there's a couple other things that we have to keep in context in a bear market year, which is, first and foremost, when we interact with the weekly SMA, typically we will give it back after we interact with it. Now, most other times that we interact with it, it's a period of about 1 to 3 weeks. This is the second longest time period during a bear market that we have spent above it, of about 6 to 7 weeks. The first most being in 2014, we spent about 13 weeks elevated during the deliberation with the IRS about whether or not Bitcoin was property. They decided that it is property, and the price still sold off. So for me, I do not think they're going to pass the Clarity Act on September 15th, and that is the, cent-a-billion, multi-trillion-dollar spigot that we need to start flowing. That is the stablecoin inflows. I don't hear many other people talking about it this way, but to me, that is the critical narrative, guys, is once JP Morgan Chase is sending pamphlets out in the mail to get you to deposit X amount of dollars into stablecoins because you get X amount of points for transactions, that is when some of that money is going to trickle down to new car loans, new home loans, towards you buying Bitcoin directly. A portion of that money will flow directly into Bitcoin. And again, I think that is where we see our meteoric rise. It's hard for me to believe prior to that, when again, the majority of the money in this candle right now is leveraged. It's not spot, it is leveraged. $1 of spot for every $94 of leverage. So to me, these people are going to get stopped out, myself included. If I don't close this trade, once we get to key levels, I'm going to lose the money that I've made in this position, which I'm obviously not worried about because, again, it's a very small percentage of my portfolio. But that's kind of what you have to acknowledge at this time, is you either believe that it's going to continue to go higher, so let's address that. What are levels that realistically we can continue to rise towards? So as I'm recording this, we're at about 72.5. You guys already know I talk about 70.3K quite a bit. That is not important at the moment. I think even our retest, looking on my phone, our retest was about 71.1. So 71K itself looks to be holding as support in this range. Not really any reason to break down lower than that, at least so far today. It is relevant prior to today, but prior to today, really, it's like 69K that we would have to pay attention to. And again, that's essentially the weekly SMA itself. So I do think that that'll be important, but when I think that'll be important is probably next week. So broadly speaking, what we got to remember, guys, is between now and Sunday's close, this is elevated above the weekly SMA. That's a big deal. So again, just to highlight, let's go look at the other instances. Typically speaking, when it breaks above the weekly SMA, it doesn't stay there for very long. It's not a long time that it stays above it when it does that. It's 1 to 3 weeks that we get above it, and then it starts to react negatively. Now this week, now obviously it closed way above it, and then what did it do next? It immediately needed to retest it. Now there was no guarantee that it was going to break that and continue, but what the trend tells us is in a bear market year, that's what it's going to do. 90% of the time, that's what it's going to do. So for me personally, that's what I would be looking at, is wherever we close this week. And again, if we start to see weakness before it's 73.8K, that wouldn't necessarily invalidate a move towards 73.8K, but what I would expect to see then Monday forward is the price wanting to retest that weekly SMA at the very least, a retest back to that 69.3K level roughly, at which point I will have to make the decision personally of, do I re-add to this position, which I think is debatable in my case because that would really change my cost basis quite a bit. So it's probably more likely that whenever we get serious consolidation where we are now, I will close this long and then I will kind of wait until we get confirmation of, like I said, if we test that weekly SMA, what logic and reason would tell me is that it will continue lower. We are not behaving with logic and reason right now. So there is totally a possibility that the price actually wants genuine confirmation of that 73.8K to 76.3K level prior to being willing to like actually start giving it up back towards the midpoint, which I do think we're still going to return towards the midpoint. Personally, I'm not someone who thinks that we are not going to go lower. And again, when I learned that for every $1 of spot money right now, there's $94 of leverage dollars. Like, guys, come on. Like, there's no way that we build the future of Bitcoin off of that much leverage. They're gonna try and wipe us out, period. You know, so where are those levels? Again, I would think 73.8K would be the most logical stopping point, where if the price actually starts to see real resistance on this run up, that's where it would be. You know, I had talked about 66.9K at the time. I was in the membership talking about it as we were ripping through it. You know, I've said this for like 2-3 weeks now. When the point of control, that is the point of the chart where the most people press buy or sell, when that dropped from 66.9K to 64K, what I have anticipated and called out ever since is when we retag 66.9K, it's not going to be important. We're going to rip through it like tissue paper. And that's exactly what happened. You know, so for me, the next logical level to pay attention to, and again, I'm seeing a bunch of people repeat this to me on Threads and everywhere else, is 73.8K. 73.8K would be the logical, okay, how is the price reacting to this? Does it need to pull back? Is it going to continue to extend? I think we've already seen the bulk of this move, to be honest. Again, we have the CFTC meeting today, so it is possible that more news comes out, but I think really what we're looking at for between now and the Sunday close is somewhere between 73.8K to 76.3K is the highest I can believe, which does not have much more room to run. What is that? Never mind. 4%, 5%. That's pretty good. I will happily take those profits, to be honest. But broadly speaking, again, that's what I would expect between now and Sunday is generally a move in that direction. I would expect, however, that the first thing that happens Sunday into the overnight into Monday or Tuesday, potentially Monday specifically because more money will enter. It's like almost $1 billion worth of open interest on Coinbase right now for these Nano BTC contracts, which is crazy. I've never seen it that high before. Typically it's in the like 100 million to 400 million range. So to be at 800 million 800 million plus is pretty wild. And that's not even CME. I'm sure CME is a lot higher. Like I said, $48.9 billion worth of futures open interest, which is, again, completely absurd. So those are our two logical targets, guys. Logical targets, 73.8K and 76.3K. I could believe that we will reject off of either of those levels according to logic and reasoning, because the market is not behaving with logic and reasoning. Again, a good deal of the money that's coming in is Sally Sue, you know, just talked to her IBIT manager. She talked to her BlackRock employee that's going to help her out, you know, and you got to trust that that individual is never going to be in loss. That's what BlackRock is signing them up for, you know, that they're never going to be in loss. Even though all the people who bought the ETFs before, other than people who bought them the first 2 months, have had to experience a period of loss, but magically, these people who just bought, those people are never going to be in pain. Sure, whatever. You can continue watching Nickelodeon to get your information. I'm going to use logic and reasoning. I think eventually we will sell off again, primarily, as I said, because of how much of this money is leveraged instead of spot. When that is overwhelmingly spot, which to me does not happen until the stablecoin flows happen, I would think that this is going to sell off. So what if it doesn't? What if it does not sell off? What are our next levels? So the next two that I would really be paying attention to, again, is the middle band of the downtrend anchor VWAP, which on the weekly time frame is about 79.4. I think I said 78.7 or something like that on the monthly time frame. So broadly speaking, I would think 78 to 79.5 roughly, which means also 78.5, 79 itself. I would think those are all important. According to weekly closes, 78.3K is the important one, as well as about 77K is also important. I think 78.6, 78.7 is the more important of those two. But again, what we would typically expect to see is a rejection at that middle band. So what we could see is we get this weekly close and we get an extension into next week, where again, logic and reasoning would tell me that we would get a rejection prior to about 79.5. And that, again, that could be an interaction with the middle band that gets rejected. Most of these other instances, we get a wick to it. In this instance in May, we didn't even get a wick to it. So it's reasonable to me that next week we could get a continuation. Again, if logic and reasoning has left the building, we could get a continuation where the wick heads towards that, but I would not anticipate that the week continues at that level, as I would anticipate that the levels have to kind of return to that 76.3K target if it cannot get above the middle of this next range. So I talk about this all the time, guys, that 70.3K level. So that 70.3K level, because we're above that midpoint, what does that mean? That means it puts pressure towards a 76.3K retest. Now, the same logic would apply to this next level, this next range rather, from 96K to 76.3K. We would anticipate that the midpoint of that range, which would be about 86K, would be a critical inflection point for us to know if the pressure is going to relieve towards 76.3K once more, or if there is sufficient enough volume to get a test towards 96K. Now, me personally, I don't think we're about to see 96K Bitcoin. I don't think so. It does not make sense to me personally. So the other thing that I would pay attention to here is this guy right here. This is the upper band of the weekly SMA. You could do this for the monthly as well, but we're on the weekly, so let's talk about the weekly. That's sitting at about 82.6K. Let's see when in a bear market year we have an interaction with the upper band. So this is the upper band. This is 2022. We have a move towards it in March, April, May. It does not get to it. It gets rejected at that time. It continues to climb downward. The only difference being where we are right now, it's more of a period of consolidation, I believe, than a sharp downtick. You guys already know I don't use the 2022 fractal I haven't used that at all for this year. It's not relevant to us. The 2018 one is the one that's relevant to us, and that's also no longer relevant to us. But basically same pattern where we head in that direction. We never quite get there. It continues to drop. When do we actually have our break? April of 2019. When do we have it in 2023? January of 2023. That's when we actually have another interaction with that upper band, Bollinger Band, for the, again, weekly SMA. Same thing for 2014. So we have a run towards it in that same time period, that April, May, June window. It does not get to it. It continues to sell off despite objectively bullish news that the IRS has deliberated that Bitcoin is property, objectively bullish. When does it actually break above? July of 2015. What does that mean for us? Somewhere between January and July of next year is the earliest that we would actually anticipate an interaction with the weekly SMA, or not the weekly SMA, the upper band of the Bollinger Bands on the weekly time frame. Now again, I'm using the 20-week, so maybe that's slightly different on the 500 or the 200. I don't care, whatever. The 20-week has been very good to me. I'm going to continue to use that. But again, logic and reasoning would dictate that we cannot get another interaction with that target, which again for us is 82.5K. We would not expect an interaction with that until January at the earliest. Now, does that mean that it's not going to happen? No. But I'm trying my best to apply logic and reasoning to what we are seeing on the charts. So for me, I would expect an invalidation in excess of getting to that level, as well as I would expect an invalidation in excess of getting to 79.5K itself for that middle band of the downtrend anchor VWAP. Now, I haven't drawn downtrend anchor VWAPs from past cycles, so I can't say with definitive certainty that we don't end up breaking and trending higher, but I would imagine that we don't actually break that until on the other side of whatever the theoretical drop is, which for me, again, I am not convinced is not still on its way because of how much leverage is in this. This is not, we're not talking about tens of billions of dollars worth of spot ETF flows, guys. We're talking about 500 and something million dollars worth of ETF flows and billions of dollars worth of leverage. So to me, this is still going to get wiped out at a certain point. So really what we're looking for, again, we got those two scenarios where it either keeps rising. Logic and reasoning would tell us that it cannot get to 79.5K or higher, which means no bull market yet, guys. If it can't get above 79K, 80K, no bull market if it can't get above that level. So that's our best case, is if we not only continue to sustain strength above 76.3K, but also break those two other targets, which we don't have any, we have no evidence from a historical context that the price will do that, you know. So for me, it's not gonna do that. So what we have to look for, again, this is according to logic and reasoning. The chart is not necessarily adhering to logic and reasoning right now. We would want to look for our natural invalidation points, which again, for me, I think the most reasonable ones are going to be 73.8K and 76.3K. It does look like we're struggling a little bit at 72.4, 72.5. Not a ton. It's still chugging along higher. I even said in the membership, it looks like we're gonna get a pullback, and it was like we got a pullback for like 30 minutes, guys, and then it just continued ripping after that. I would not be looking for shorts right now. I don't think it's time yet. I think it would be time closer to, again, I don't even think 73.8K. I would think 76.3K, to be honest, and that's going to be, I would think, more closely related to the weekly close, and it just depends on the outcome of the news today. But everything that I have seen is we're talking about maybe hundreds of millions or tens of billions of dollars worth of inflows into the total market, not just Bitcoin. So I don't understand how that magically makes a $2 trillion asset move like this. You know, that does not make sense to me personally. So where I would start to look for clues of an invalidation, again, would either be 73.8K, but I'm not confident. It does look like we had a flip on the 15-minute time frame on the SMA, so that could potentially draw us lower. But again, I'm not looking for shorts yet, guys. I will probably change my tune on that maybe Monday or Tuesday, but I am not currently looking for shorts. I am just riding this long. I would love to add to this long, but I don't think so. Based on how it's performing, I think I got to accept what I got and wait to the downside whenever that happens, which I do believe it's going to happen. I don't think that the bottom is in. Personally, I don't see why it would be. I don't see why this would be a great opportunity for the market makers to completely wipe out all of this leverage exposure that's to the upside. And again, all of what I just said, 72 to 86K, there's no human beings that care about those levels, guys. Nobody cares. Nobody cares. They care about the levels we were just at. They care about 66.9K. We ripped through it like tissue paper. They care about 64K. We are going to print a healthy acceptance candle of both the point of control, the 64K Fibonacci pivot level, and that bottom band of the downtrend anchor VWAP. That's all this week. That's all this week, as well as a bullish reclaim of the weekly SMA. So what is the first thing that the price is going to want to do next week? It's going to want to test to make sure that the weekly SMA is actually support and set of resistance. So at the very lowest, that's kind of what I would be anticipating early into next week, is a pullback towards 69.3K. And then you just have to decide for yourself at that time if you want to be adding to the upside or if you want to close your position. I don't know yet for me. I'm going to pay closer attention to how it behaves on Sunday. I will be open to closing my trade. Again, if it gets to 73.8 or 76.3 and it starts to show a little bit of weakness, I have no problem with closing my trade at that point, happily taking all of my profits and then just waiting for the next clean setup. I did not take this setup according to my rules, guys. I just looked at the writing on the wall. I just paid attention to the fact that the market is behaving irrationally, and I put in a couple contracts for long, and that was it. You know, like nothing really that complicated about it. Let's go take a look at the daily time frame again. Yep, just as crazy. Like that's not reasonable. That is going to stay elevated forever. I would think when it behaves that way, like look at this in comparison. So we've got this general trend up in May. It took weeks, guys. It took weeks. It took a long period of time for that move to happen. This is 2 days. 2 days that this rise happened. So I don't think it's sustainable. It's just a matter of where it is going to sustain to. The daily time frame is a little bit different than the higher time frames. It's slightly more likely that we can get an interaction with that middle band of the downtrend anchor VWAP, but broadly speaking, I would still kind of expect the same thing, where we see a rejection at that level. So there's not really much else up there for fib pivots. Let's take a look at the 4-hour time frame. Yeah, 4-hour time frame is still blind, guys. And it looks like it will be blind until Sunday. I don't think we get new fib pivots until probably Sunday at 5 p.m. PST. We'll get whatever our new fib pivots are for next week. But this is like way, way extended from what that indicator is telling us. Pretty much same story for the 4-hour time frame. I will say the 4-hour time frame, it is more likely that we will interact with the middle band than the higher time frames. It's not impossible for us to have an interaction there. So that would be 77.5. I think 77 itself is going to be important. So again, 73.8K I would pay attention to. I guess arbitrarily 75 may also be important. I would have to check the higher time frames to see if I actually care about that level or not. But 77 is reasonable to me, that will be important. And then it's hard for me to believe 79. It's like I would believe 79 is a rejection point. It's hard for me to believe that we would continue ripping after that point. I would really need to see spot ETF flows become like tens of billions of dollars a week instead of hundreds of million. Like that's not really, I don't see where the demand is going to keep this elevated forever. Again, we have just entered the region where the anchored volume profile is thin. We have just entered it. So it's just as easy for us to get bullied. And actually this is, I haven't been covering this as much. A lot of these people are starting to thin out. I'll have to go back and look at older videos for that, but that's significantly thinner than it was. So what that tells me is that this is an opportunity as we rise into this range for these people to decide, okay, I'm done with this Bitcoin thing. I'm going to buy OpenAI or SpaceX or whatever, or even tokenized stocks. I need to do a little bit more research on this US 500 perp contract that I keep seeing pop up. But for me personally, I'm like more interested in learning how to trade the PAXG perps, because then all I have to do is look at the gold chart in addition to the Bitcoin chart, whereas a lot of the other altcoin ones, highly volatile. The only thing I'll really say about that is if what I think happens with Bitcoin is going to happen, where we eventually find a topping out point, I am probably going to short the living hell out of a couple of those altcoins, because they will drop really violently if Bitcoin does indeed drop here. So that would be the primary thing I'm looking at, guys, is that anchor volume profile, again, pretty thin from about 87K to about 72K. And I didn't notice that until this video, but it does look to me like some of the volume is thinning out from those higher levels. So those people are starting to get tired. The 2025 buyers of, again, about 87K and higher, some of those people are starting to thin out a little bit, which could be good. It could thin out this level, but same argument as the point of control dropping from 66.9K to 64K, where long term that's healthy for the price. What it does short term is it makes these levels less important when we reach them, which makes it just as easy for us to get bullied in either direction when it is heavily leveraged instead of spot positions. So what am I looking at in the next 24 or 48 hours? Like I said, 73.8K is going to be the most important one. Price has slowed down, not really that much though. Even this morning, that's still a pretty healthy move. I mean, that's 1 o'clock in the morning. I was awake for that, unfortunately. Yeah, I mean, it doesn't look like it's ready for a pullback yet. I would not be trying to short this, guys. I would not. You do whatever you want with your money, but I will not be doing that. I think closer to 76.3K is more reasonable for the price to actually stop out. I would not say that 73.8K is going to be a hard rejection point. It could be, but based on how the price is behaving irrationally, based on news that, again, to me, is to the tunes of hundreds of millions or potentially tens of billions of dollars instead of what we need to see, which is hundreds of billions of dollars, I don't see how it's going to sustain. You can correct me in the comments if you think that I'm wrong about that, and present evidence. I'd love to hear it. You know, I like hearing your guys' opinions. So Anything else you need is in the link down in the description. So again, that 4-hour break room membership offer that I have is $49 a month for the first 3 months. And you get my interpretation live as we are getting primarily Bollinger Band breaks. I will sometimes just generally update people about my trades outside of Bollinger Band interactions, but I really try and keep it to when are we actually tagging the bands or the SMA itself, because that's going to be your most information. One, for how I'm thinking as I'm managing trades, which I did say the membership got that earlier than anybody when I entered my trade. If you had just waited for the YouTube video for when I entered that long, you missed the move. Like again, my cost basis I think is 65.7, so I got in before we got the bulk of this candle. And the only people who saw that are the people in the membership. Anybody else, you got that. By the time you saw the YouTube video, we were already at whatever, 69K. So missed the bulk of that move. So check that out. Check the offer down below. If you have any questions, comments, concerns, leave them in the comments. I would love to hear you guys' feedback at the moment, how you're trading this range. I feel bad for Paul at the moment. You're probably getting pretty close to liquidation on those shorts. I don't know, again, based on everything I've said in this video, it's hard for me to believe that the bottom is in and we're just going to continue higher now. I don't really see how that is the case based on all of the collective news stories. None of them are equivalent to turning on the floodgates or whatever, removing the floodgates and just allowing hundreds of billions of dollars to flow into Bitcoin. So again, I think the combination of all the factors that I brought up in this video, primarily at the moment being the thinness of the anchored volume profile between 72K and 86K, I just think at some point we're going to find weakness, probably around the weekly close. I would expect a pullback, as I said, towards the weekly SMA. But until then, I don't really see any reason why the price will not continue to go higher. So I may add a little bit to my position if we get a more significant pullback. Like I said, say we get another retest of 71K, that may be appropriate. But that could just as easily be regarded as rejection at 73.8K, which I don't think is as important as 76.3, but that's what I'm looking at right now, guys. So again, if you want my broader strategy of how to trade my strategy on your own, go check out the advanced Bitcoin trading course at the end of this video. I would not be using it for shorts right now, guys. Like, that's all I'm going to say. Not financial advice. You do whatever you want. But that section of the video where I'm explicitly saying, this is a short entry, this is a long entry, that applies to when the market is behaving rationally. The market is not behaving rationally right now. So do not fight the trend, my friends. Just kind of allow the chart to dictate your decisions instead of your emotions. Anything else you need is on the website. Have a wonderful day. I'll talk to you guys tomorrow.